Hello, this is Ahura, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week 28 of 2025. After very busy week that we had previously, week ahead going to be slightly light week with more focus on central banks meetings in Australia and New Zealand. However, let's first we have many other data also to watch, but let's first have a short review on the previous week. Previous week, the most important data that we had was PMI numbers from the most developed and developing economies. Mostly, we had a positive data from Europe and UK, even out in the United States. They were somehow showing the manufacturing sector specifically is growing a little bit better. And in some European countries, such as Spain and Portugal, also the service sector, considering getting closer to the summer holidays, also had a better activities. In United States, we had the labor market data. We had a very good data, actually. The unemployment rate also fell to 4.1%, but participant rate, it was a little bit lower, while the data, the weaker deep going data, it shows that during that the people that they will stay unemployed till finding the new job is getting a little bit longer, around 10 months, which means that the new hirings, they have a little bit more challenges in this U.S. economy. So, but now, well, I mean, while the in a bigger view, in a picture, sounds like a very nice labor market, but at the deep data, we can see some challenges there and some concerns. The previous week also, if you go out of this economic data, previous week we had a very busy week with the Trump's one big beautiful tax bill, which finally they could pass, and now especially in the House. So now it's going to be going to get a law. So let's see how it's going to affect the market. We have a very big tax cuts there. Some economists they have concerns that what's going to happen for the U.S. government's income if we had such a huge tax cuts. So maybe we have a more deficits in the U.S. So that's the talks that they're there. But however, that was enough to support the stock market to touch new highs, even thought after positive data that we had in the labor market, which means that the higher for longer in the central bank can affect negatively the stock markets. But at the same time, these big and beautiful bill could support the stock market to have a little bit of rally and current new record highs. Week ahead, we have to focus on several stuff, especially on the economic data calendar. We have very we have very light week. Let's review the one day by day. On Monday, the industrial production in Germany and retail sales for the Eurozone will be more important to watch. However, don't forget that on Sunday and Monday, we have a BRICS summit. Don't forget to follow, because the Brazil, India, China, Russia, South Africa, they are big economies, and they're gonna come together and make some economic decisions. So probably they're gonna have good effect, especially in South economies. So yeah, the industrial production and the retail sales from the Germany and Eurozone both are expected to fall by 0.5 and 0.8%. We are not going to have such a good week this week for the Europe and UK economy. We're going to have some disappointing data, while in Japan and Australia, in China, we're going to have a little bit better than expected data. We expect so to see some progress. On Tuesday, the most important data will be a central bank meeting in Australia, and also PMI numbers in Canada. In Australia, we expect to see the RBA to cut the rates by 25 basis point from 3.85 to 3.60, as inflation is almost under control and economic growth has some challenges. That's why the central bank is supposed to make some decision to support this weakening economy. In Canada, we expect to see slightly progress in both manufacturing and non-manufacturing sectors. Generally, PMI should show some progress in economic activities. On Wednesday, Chinese inflation supposed to finally leave the negative territory, and we can see probably the inflation at 0%, or to see the flat at 0%, or 0.1% progress. Probably we're going to see some progress here. We know that the central bank and also the government have been supporting with the stimulus and so many other supporting packages to encourage the buyers and the consumers to go out and spend money. So that's to make some demand in the market, which is the most important concern of the Chinese economy at the moment. Unlike and then after that, we're going to have the Australian Central Bank meeting as mentioned. But on Wednesday, after Australian Central Bank meeting, which is going to be on Tuesday, on Wednesday, we're going to have the New Zealand Central Bank meeting also. Unlike Australia, in the New Zealand, we expect to see the RBNZ to hold the rate at 3.25% as inflation is almost under control and economic activity also is fine. So after some weakness we're going to have here. So that's why the central bank, most probably, they're going to decide to wait and see what's going to happen in economy, and then they can make the next decisions. However, we have to watch two more important events there. Fed meeting minutes, which is going to give us more data on what's happened in the previous Federal Reserve meeting, and they're going to give us some more outlook and some more insight on what happened in the meeting and how the central banks decision makers they are deciding and thinking about the economy. But at the same time, on July 9, it's the last day of pausing of tariffs, then the US tariffs finally in the real world going to be affect the market. If that going to imply, we know that the central bank, we know that the US government, they paused the tariffs for 90 days, and this 90 days is going to be end on July 9. So we have to wait and see how the economy and how markets and others are going to react to these starting the tariffs, or they're going to get extended for some other reason. But still, it's going to be very important and can affect the market sharply. On Thursday, we have so many speeches from the BOE and Fed members. We're going to follow these speeches, especially after Fed minutes and after especially the July 9 starting the tariffs. We're going to see how the central bank speakers, they are thinking about the economy and economic progress. Still, as always, we have on Thursday, we have initial jobless claims and also continuing jobless claims and initial jobless claims, and we have to watch and see how the labor market conditions is. On Friday, we're going to have GDP, industrial and manufacturing production from Britain or Great Britain. We are expecting a little bit weaker data, as mentioned earlier, from the British economy. So I'm not expecting to see the brilliant numbers there. That probably will put the pressure on British pounds against other currencies, against the rivals. They are the most important data that we are expecting to be published in the week ahead. Let's go and see the charts, and we can see how these expected data can affect the charts. About the US dollar, I have to mention that after previous week's NFP numbers, we can see right now that the labor market sounds like fine, while the inflation also is under control. That's why we expect to see current rates a little bit longer, which means that's why the US dollar downtrend is almost ended around 96 and now is increasing. We expect to see 96.50 and 98.50 for this week, just like this area of the movement for dollar index. The dollar is generally is getting a little bit, we'll have a little bit pause here in the side movement till making a next decision and to see what will be the fate of this tariffs, and also the new bill of the one big beautiful bill, how it's gonna affect the markets and what real effects of the market will be against this law or against this bill. But generally we expect to see the side movement with the uptrend tendency between 96.50 and 98.50. On the gold market, with the slower tensions in the market, if nothing happens specifically after Trump and Bibi's meeting on Monday, we know that Bibi Netanyahu and Donald Trump going to have a meeting on Monday. They are deciding about the Middle East. They're making some decision and talking about it. They have some announcement about the Middle East and Iran. We're going to have we have to wait and see how the results and the reactions of this Middle East countries will be on this decision. So tensions in the Middle East are going to have a direct effect on both oil and gold prices. On the gold now, the tensions generally is lowered, and we expect to see the gold price to have a side movement with the downward tendency. On the energy market, oil can with the reports that we had already previous weeks that both EIA, IEA even thought that OPEC Plus, they're expecting to see more supply than demand. That's why they can put the pressure on the oil price. In the week ahead, we're going to have EIA and IEA both monthly reports. We have to see how they're going to expect the market to see. We know that U.S. Federal Reserves is lower, still is lower than previous years comparing with the historical levels. That also can increase the demand on the oil, especially getting closer to the summertime, which means that the more troubles and more need for the oil. Maybe these that can hold some pressure against this downward tendency, and maybe they can support the oil side movement around this area, at least for now. On the other markets, on the stock markets, as mentioned, the decisions, the labor market data is supposed to be negative for the stock markets, as we're going to have the higher rates for longer. So it's kind of usually it's negative for the stock markets. But at the same time, one big beautiful bill can support the economic activities and stock markets. That's why we had a new records there in the stock market. So like I said, that these the data, especially on Thursday, we had a new records high. After that, after this new records high on Thursday, which we had, now probably markets going to think a little bit more, and we have some cautious reactions from the stock markets there. So generally, the market in the week ahead, especially with the expected decisions, expected challenges which we're going to have on July now for the tariffs. Most probably we're going to have some considering around these areas with slightly correction, but generally still the overall uptrend, especially as long as S&P 500 trading around above 6,100 is tendency is positive. Same things we can say for Nasdaq and Dow Jones as well. About the cryptocurrency market, there is no reason that there is no specific sign that we can say, okay, because of this sign, the crypto market is positive or crypto market is negative. Previous week's Tesla report supported a little bit the cryptocurrency, the idea of the big wallets, which they were required for more than like in recent years, and they're having more than 20 Bitcoin. They have a little bit more on-chain data shows that they had a little bit more activities, but still there's no sign of the selling, but the more activity of transferring. So, but still, as I mentioned, we have to wait and see more reasons, more clear reason of what this market is going to do. Anyway, between 100 and 104 and 109 is a side movement right now. Any new trend supposed to increase about 110 and under 102 areas. Generally, that's what happened in the market previous week and what we're expecting for the weekend. If you have any other questions, don't forget to write down in the comment section. We'll try to get back to you as soon as I can. Have a good time. Bye-bye.